Hello everyone and welcome to day 3 of the crypto trading course. Today is one of my favorite. It's the day trading course, and we're going to be reviewing, this is the intro video, we're going to be kind of reviewing some of the benefits, some of the indicators, and this course is also, or this day is pretty helpful too, because it doesn't just relate to day trading, but it will be using a lot of the same patterns. So this also applies to day 4, the investor course. So it's kind of cool. It hits a lot of fronts. It should be really helpful to anyone getting started. And even if you have some experience, it's always good to review and see what other people are doing. So with that in mind, let's get started. So why do I like day trading? To me, it's great because if the market's going down or if the market's going up, you can profit, and that's exciting in itself. Actually, some of the best days trading is when there is a massive swing to the downside, because if something's falling X percent, 10, 20, 30%, then usually there's a nice rebound, and that's really fun to day trade. However, it is super dangerous, and you've probably heard the expression of catching a falling knife, and that's because it's a real thing. If the price tanks, 10%, there's no reason it shouldn't tank, half the price of the currency, or 20, 30. There's no bottom sometimes when a price is falling, so you really want to be careful with that. It might happen to you a few times, but eventually you'll listen, or you'll kind of learn on your own. So it's something that might happen to everybody, but I'm here now telling you, don't try to guess a bottom when the market is tanking. It is dangerous. We're going to review this strategy below. I call it the waterfall strategy because it kind of looks like a waterfall. So yeah, we'll do that. And another favorite strategy of mine we're going to review today are breakouts. So these are fun because this is kind of when there is a ceiling, and the price kind of every time, let's say the price hasn't got past 5 for a few months, $5, and every time it gets to that price level, it kind of bounces, hits it and bounces right back down, and then maybe a few days later it tries again, or if you zoom in a bit more, it happens every 15 minutes or something. It depends on your time frame or what the currency is doing. Anyway, you see this over and over again, and then when it finally does break that resistance level, the price sometimes really shoots, and this is often resulting because of a short squeeze, which basically is when too many short sellers or people betting against the market, so hoping the price goes down, get caught on the wrong side of the trade, and they have to buy to cover their positions. If you don't know what short selling is, just do a quick Google. I'm sure there's a bunch of people explaining what it is. We won't be doing too much of that in here. Maybe eventually I'll do a bit more margin trading with maybe Bitfinex, but I know GDAX, one of the exchanges I use the most, like we talked about in day 2, that's not an option, so I can't do it, unfortunately. The breakout pattern, which we're going to review below, is one of my favorite bread and butter plays, so it's something I do over and over again, and I'm always looking for that setup. Here's a quick little video if you guys want to watch it. Just reviewing, this is a video lesson a few weeks ago where I'm just kind of reviewing some trades and how I profited in a market that was going down. There's actually quite a few videos scattered in this day, so if you guys want to check any of them out, just go to crypto.enslow.com. Sorry, I'm like losing my voice. And then just go under community course day 3 and you'll see them all. So the important part about day trading is you want to know your indicators. We are only going to be using 2, like we talked about in day 2. But basically we're going to be using price and volume, and that's it, and we're going to be looking for patterns using that. Let's see, this also lets your charts be very clean, so you don't have a bunch of kind of noise, you don't have a bunch of different indicators telling you when to buy, when to sell, because it can get very cluttered very easily, and you don't really want all that. It's nice to know how to read an indicator, and there is some value to that. I have really nothing against people or indicators in general. I just don't use them for when I'm day trading. So the price is, in a nutshell, the cost of the coin or token you want to trade. In the end, what everything boils down to, right? So if every other indicator out there is just a derivative. It's a kind of equation based on the price. So if you can learn how to read price, you'll definitely have an edge. And I don't believe it's necessarily harder. If anything, it kind of reduces the amount of stuff you're looking for and maybe some of the stress as somebody coming new to the market. Because if you go to, even if you go to your trading view that we talked about yesterday, you can go under here and you can find 1,000 indicators. And I probably shouldn't even be showing you guys this because this can get really overwhelming. And you throw 10 of these on your chart and you're not going to know what line, what signal to follow anymore. So that's why we avoid all those indicators. The second thing we're going to be looking for is volume. So the more volume, the better. Means a bunch of people are looking at the coin, or we'll just call it currency. And sometimes you'll see, a currency is basically flatlining with volume, and you can see that here at the bottom. This is the volume bars. So you can see here no activity, no activity, and then finally a huge volume spike. A bunch of people are looking at it. I'm not sure what happened with Stellar. Oh, they had a partnership deal somewhere. I couldn't even really recall. I wasn't following this one too closely, but they did have some sort of partnership deal with, I believe, IBM. And so, they're getting a lot of press. People were checking them out. So that really makes a coin move. Another reason volume is so important is because this actually almost happened today. I was looking at the gainers for the making a watch list. And I put this one on my watch list, didn't even realize what the volume was. Anyway, it came out to about $20,000 worth being traded a day. That was their average volume, which is kind of ridiculous because sometimes we want to trade with between $3,000 and $10,000, however much we want to build up our position. So if that was the case, we would be up to 50% of that daily volume. That's insane, and that can happen sometimes with these cryptocurrencies because the volume is so small. Some of these coins no one trades. So you have to watch out for that because if you're the majority or even 10%, that's already way too much of a coin. Then you have such a big influence on the price. And not just that, maybe that's great if you're really wanting to invest into that, into the long, basically into the sunset. But if you're looking to day trade it and you're contributing that much to the volume, the second the price goes against you and you're going to try to get out, it's going to be really, really tough, and you might get stuck with some pretty big losses. So we want to look for good price, something in our price range that we'll review later, and then two, we want to look for something that has good volume. So basically volume's increasing, there's a lot of news, that means it's going to be heavily traded, and that the volume, regardless if it's up, is enough volume to begin with. So I think that's enough for now. We're going to be doing video lesson or the next video in a second here. So review all that, maybe check out this video if you want, and in the next section, we're going to start with the chart patterns. So I will see you guys there. Ciao, ciao for now.